Let me start this video by asking this one question. Do you want to make money or build wealth? If your answer is to make wealth, then you are really going to enjoy this video. And if you are interested in money, and there is nothing wrong with that, of course, then I also have a few tricks for you. So about 2 weeks ago on August 27th, I posted on Community tab that I just bought 1,000 shares of Affirm on the news of them partnering with Amazon. Now the stock shot up 20% on the news, but I didn't care and bought the stock regardless. So if you saw that post and placed any trades, then do let me know in the comments, as I always enjoy chatting with you all. Okay, so here is my reason for jumping on Affirm as soon as possible, and again, my opinion only, entertainment purposes only. I'm not a financial advisor. So every few years, a company comes along that not only makes sense and fit well in the industry, but when it starts to feel a no-brainer, then you know they have created their own market. Affirm is one of those companies. Without getting too bullish on my emotions, let me just say this much. This is like you buying Amazon in 2015. Knowing what you know now, who wouldn't want to own Amazon? Now, let me share my research, and I will walk you through few pieces of news that made me believe that this will be one of the major market movers. So when you head over to their investor presentation, one of the very first images that captured my attention was this, right here, that says massive digital commerce opportunity. The reason why I underline it, because this is not just buy now, pay later service or a company. This is much bigger than that. This is a platform which is going to offer many more fintech products in the very near future. So now pay attention to the next image, and you can see that they are currently a tiny fraction of the whole economy of the retail sector. Retail sector is huge in US, and they are just sitting with $4.6 billion of GMV, which is gross merchandise volume, right here as a small dot. And on top of that, they have 100% merchant retention right here. And why wouldn't they? When someone signs up with them, there is no reason to dump them because it's helping the merchants in driving their sales. So there is a no-brainer and win-win for both the companies. Along with that, they are not just building a company, they are actually building a brand right here, as you can see, and they're comparing themselves to Tesla and Apple right here. And I've seen their little logos on so many checkout pages that it kind of become a habit of seeing Affirm everywhere. Now let's talk about their Q4 results right here. So these are some very exciting numbers, and the reason why I said Q4 because fiscal year runs differently, so don't get confused. This is the result that they just announced on September 9th, but it's mentioned as fourth quarter of 2021. And yes, so they are saying that their GMV right here, I'm going to enlarge it, gross merchandise volume increased by 106%. That's like opening another Affirm on top of Affirm. It's massive. From just 1 year ago, they had 1.2, now they're at 2.4, 106% growth in 1 year. Now let's look at some of the numbers. Their active customers and their active merchant both went up in drastic and staggering numbers. Look at this, 97% growth in active customers and 412% growth in active merchants. These are some massive number, no brainer again. Look at this, both sides are increasing at the same rate, which is awesome. Now let's talk about the revenue. So as you can see, Affirm's revenue went up 71% right here, a year-over-year growth. Fiscal year Q4 2020 versus 2021, 71% growth. Now, here's the kicker. This does not have Amazon anywhere. So think about where revenue would be once they have Amazon. But another bullish sign is this. So they had some amazing growth, as I just said, 71%, and that does not include Amazon at all. They're saying Amazon partnership we have recently announced. We are currently in early stages of integration. We will update you on the progress and the incremental impact to our outlook each quarter. So right now they are not even mentioning anything about Amazon. Along with that, they also launched a debit card. Right here, as you can see, that finally we are very excited about the rollout of Affirm Debit. Our outlook for fiscal year 2022 also does not include a contribution for this new product. So they are not even including Amazon, but they're also not including their debit card, which is going to be huge. And the reason why it's going to be huge is right here. Affirm launch of a physical debit cards propels BNPL, which is buy now, pay later, into daily and offline spending. So now users can use the debit card to pay for the items. It's the digital card. It's like swiping left and they're saying that you will have your card that you can pay for services. This is really, really good and really, really key. Why? Because they are keeping the users in the same ecosystem. They don't want users to go and use Visa, MasterCard, and I'm sure that they're sweating. Visa and MasterCards are sweating right now. Now comes the really interesting part. So look, this is the transcript and I took out some of the points that I found to be very, very exciting. Because of course, analyst wants to know more about Amazon partnership, and this is what Affirm has to say. Testing is ongoing, literally day in, out. We are in the phase of a partnership right here. So it's a partnership, it's not a deal that they're making with Amazon. But then this is where it gets super exciting for me personally. This is what they added right here that I underlined. But we have become sort of undisputed provider of the service to the enterprises because we are really that good. We think that any enterprise thinking right here, we think that any enterprise thinking about offering buy now, pay later or pay monthly looks at Affirm as gold standard. And we intend to provide those services to people like them. Just look at their merchants. If you look at the merchants, they are everywhere from Real to Gucci to all the way to Priceline to Eddie Bauer. They are everywhere, all those merchants, Delta Vacations. So you can now use buy now, pay later to all sorts of things. StubHub, I mean, this is massive and big industries that they are covering with just one product offering. Let me bring your attention to this one fact. They have one product or one technology. I shouldn't call it a product because now they have a debit card as well. That one technology can be implemented to multiple industries wherever we use money. This is great and massive for this company because they don't really have to reinvent the wheel. They really don't have to do much with the product. They already have a product that's working for so many merchants. They just have to now keep selling the same technology to different merchants. And buy now, pay later is one of the hottest sector of fintech. I'm really excited for this company and I feel this company is going to do really well in the coming days. Now let's discuss stock a bit and see what the chart is telling us. So I have pulled the chart from the day Amazon deal was announced and you can see that the stock jumped drastic right here. It was like sitting at like 56 to 60 level for a long time. And then all of a sudden Amazon deal was announced, boom, it got up and then it ran with the flow. Now after even that, it kind of stagnated right here at that level because everybody was waiting for the earnings. Earnings were going to be huge. I even had my own doubts because of Peloton, because of all the issues that happened with their bikes and bikes not selling and Peloton stock going down. And Peloton is a very big customer, or Affirm is a very big partner of Peloton. So I was also not very bullish on the call because I knew that Amazon's earnings or Amazon result is not going to translate into this earnings. So there is no point for this stock to rally. But what they released, my goodness, this was awesome. This was really good news. And I'll show you what I did to kind of hedge a little bit on my position. So as you can see right here, as soon as the earnings came out, the stock just flew like crazy. And I was really surprised. I was like, oh my goodness, this is crazy what's happening here with this company. And that's what made me even more excited for this company. So this is what I have done personally for my stocks. And I'm going to tell you what I'm doing in the coming weeks and the coming months. Okay, so right here is my Affirm Holding. And you don't get confused with all those things, but let me just give you a quick take right here. I have made about 36% since the day I bought Affirm. And I bought Affirm for the first time when I put it on community post on August 27th that I'm buying 1,000 shares of Affirm. I've made about 36% of about $31,000. Not bad for like 3 weeks. Now, if you look over here, this is what I have. I have 1,000 shares of Affirm that I mentioned before right here on your screen. No, not the dollars, buddy. It's the stock. All right, sorry about that. Okay, so I have 1,000 shares of Affirm right here. Along with that, what I did was right before the earnings, because I was kind of not feeling good about the earnings. I was like, I don't know if the earnings is going to be there or not. Then I went ahead and I actually hedged and I bought puts against my position. Now right here, I did just one, because I knew that I want to hold this company for long, but I just went ahead and I kind of did a $90 put right here that I did on just one put. So basically 100 share. That's why you see 100 share here, 900 here, because I have those 900 shares separate and then I was hedging only 100 shares of Affirm just to kind of have a safe side. Now this is where it gets really exciting. So I had 2 calls, and I always tell you that I never play calls, especially in this market, because you don't know where the market is going to go. So the $200 calls that I have for November, I would have been big massively on those calls, but I sold it before the earnings. That's okay because I still made money on those calls. I was in positive when I sold those calls. Not that much, but I was not in red, which I was happy about. And I never look back on my trades because it doesn't make sense. The time has gone now. I need to look forward. Along with that, I also had some covered calls for $120 for November. Now, what I did was when the stock went up, I actually bought those calls back because I sold those covered calls on my stock just to make some weekly gains. I was never intended to I don't want my stocks to go away. So I bought them back and I resold 150, which is a higher strike price, call for October, which is a shorter time frame. So I got paid about $1.99 for those calls and I had 9 calls, so about $1,800. Right now I'm down almost 98% on those, as they're saying, because again, the stock just went up like crazy that day and even the day after. So again, I'm not worried about these because they're $150. They are much out in October and we are going to see few down days for this stock or for the whole market in the next week or two, and I'm going to share why I'm saying this. Okay, so as you can see right here that I have these multiple positions open. So this is a complete loss. I sold it for September 17th. I'm losing 95% for it, but it was about $586. I think I'm going to lose, this might be down to like 80%, but I'm still going to lose 80% on this, which is fine because I gained a lot on my shares right here. Right now my shares are up almost 30%, and I know that I'm going to keep these 100 shares or 1,000 shares, for a long time. Okay, so this is what I plan on doing in the coming months. I just read an article that Fed is about to taper or is going to taper sooner, probably from November. When this news gets out, this was just on the weekend edition of Wall Street Journal, and I could see the market go down next week just on this fear. They're not doing anything in September or October because September 21st is the meeting. They're not doing anything in the September, but they might, or Jay Powell might give us some indication on what they're planning on doing in November. But according to Wall Street Journal, we are going to see some taper happening November onwards. If that happens, market is going to react. That means interest rate is going to go up and people are going to take their money out and put it in bonds because they will feel that the bond is going to do better. So in that case, this stock will also get hit like anything else. This is also a part of a stock market. This rally will not continue for too long. It's too strong of a rally. The stock went up like 30%. It's not going to continue going like 20%, 30% like this for a very long time. It's going to cool off. When it cools off, I'm going to get out of these because I'm going to make money on these. This will be down back to up 30-40% and I'll be out of these. This is a complete loss. I'm taking it as a complete loss. I'm not worried about it. It's only one put. Now what I'm going to do is when the stock dips, I'm going to buy some plain and simple share. I plan on adding another 1,000 shares of Affirm. Under 90, 95 price point is a good point for me. On top of that, I'm going to sell puts like crazy on this on a weekly basis at like 10 or 15% discount from the price where it is at that time. Because the stock went up so quickly and there is so much news and so much hype, this stock is going to be volatile for next few weeks and I'm going to take full advantage of that. And market doesn't matter, goes up, goes down. My game will be that I need to add more and more Affirm. That's my goal. So there are only few companies that I get really excited about: Tesla, Affirm, SoFi. These are the companies that I like to add anytime the market goes down because I feel all these three companies are very strong. Of course, there are other companies, there's so many other companies as well, but these are my main, I would say, high conviction stock at the moment, at this current market condition, and also the price that they are sitting at right now. So nothing about Affirm that I do not like. From product to execution to partnership, everything is working for them. And I see them as a real threat to credit card companies. I'm sure Visa and MasterCard are scrambling to save their businesses and see if they can offer something similar. But Affirm has become the Apple of smartphones or Tesla of EVs, a true gold standard. I plan to add more shares on any major down day. And as I mentioned, we'll also be playing options on Affirm. So with so much growth potential, so much good news, I could very well say that this is the stock for me for 2021. Again, there are so many other great companies. As I mentioned, Tesla, SoFi, Palantir, the list goes countless. But what I'm trying to tell you is that this stock has already performed so well. With Amazon partnership, without Amazon partnership, with debit card, without debit card, the stock has proven, or the company has proven, its legs and its ground. From here on, it can only go stronger. And that's why I feel so bullish for this company and very well crown it as #1 stock for 2021. So what I'm saying is that if you invest invest in this company today, where it is right now, in the next 4 to 5 years, you are going to see some very parabolic growth on this company. I am super bullish and super excited, and I cannot wait to add more to my portfolio. So do let me know how you plan to play Affirm. Are you buying just a stock or playing options or doing both? I love interacting with everyone in the comments. So last week I did a video on what market is telling us. Watch it if you haven't, as it'll give you some idea on when to place the trade. My opinion only, and I'm not a financial advisor, so please take it for what it is. Hope I provided some value in today's video, and if you like it, then consider subscribing, as a lot of the viewers have not subscribed, and hit the like button so we can reach out to more Affirm lovers. As always, thank you for watching. Love you all. Until next time, you all have a sparkling day.